Hello, and welcome to the Carrot Project's 5-minute video series on USDA's Micro Farm Insurance program. This video is part 3 of the series and will cover premium costs. If you missed parts 1 and 2, we encourage you to watch those first. The information presented in this video is current for the 2023 coverage year. Information may change for future years. The Carrot Project is a nonprofit supporting agricultural producers in Connecticut, Massachusetts, and Rhode Island. And our goal with these videos is to provide you with information and options to empower you in making the best decisions for your farm. This video was made possible through support from USDA NIFA and the Northeast Extension Risk Management Education Center. Let's get started. We're sure you're wondering, how much will microfarm insurance cost? What should I expect to pay in premiums? The annual premium, or the cost of enrolling in an insurance policy for microfarm insurance, is composed of your producer premium cost and a subsidy from the USDA. In order to receive the subsidy, you must have Conservation Certification Form AD 1026 for your farm, which we covered in the Part 2 video. Your producer premium will depend on your approved revenue, the level of coverage you select for the amount of approved revenue, and the county your farm is in. As a special note, if you are a beginning farmer, meaning someone with 10 or less years of being the farm operator in charge of day-to-day managerial and operational decisions, or you are a U.S. veteran, you may be eligible for a reduction in your premium costs. Be sure to mention this to your insurance agent if you believe you are eligible. Coverage levels for microfarm range from 50% to 85% of your approved revenue. The process for determining your approved revenue is described in our Part 2 video. These coverage levels match those of other crop insurance or disaster assistance programs, with 50% being the equivalent of catastrophic loss coverage. Insurance is a tool to help you recover losses, even most of your losses, but insurance cannot cover 100% of all losses. So, for example, if your approved revenue is $100,000, you could insure between a range of $85,000 at the highest level and $50,000 at the lowest level. The insured revenue amount is called the liability in insurance terms. There are ways to curve this number in your favor and increase your coverage levels. Talk with your insurance agent about adjustment options to account for steadily increasing year-to-year revenues, or to decrease the impact of previous bad years. Now, let's take a look at 2 examples. These numbers are for illustrative purposes only and represent a fictional farm located in northern Rhode Island. Your numbers will look different depending on your approved revenue amount and on the rates for your county. Farm A has $50,000 in approved revenue, so the maximum coverage they could receive is $42,500 at 85% coverage, while the lowest coverage is $25,000 at 50% coverage. Assuming they have the appropriate form for conservation compliance, the AD 1026 form, they could expect to pay $1,683 for the highest level of coverage and $245 for the lowest level. We will point out premium costs are not a linear line, but are actually a progression. Check out the difference between 85% coverage and 80% coverage. That's a $700 difference, or 40% difference in cost, for only a $2,500 or 5% difference change in coverage. Let's take a look at another farm. Farm B has $250,000 in approved revenue, so their maximum coverage is $212,500, with the lowest being $125,000. Again, assuming they have their AD 1026 for conservation purposes, they could expect to pay $8,415 for the highest level of coverage and $1,225 for the lowest level. If $8,000 seems too much to pay for maximum coverage, or 50% coverage seems too low, we encourage you to look at some of the numbers in the middle, and again point out that premium costs are not linear. Between 85% and 80%, premium costs are halved for only a 5% change in coverage, and between 80 and 75%, costs are halved again. As you can see from these two examples, there's a wide range of potential numbers and costs, depending on how much approved revenue you're looking to insure and the coverage level you select. If you would like to go through the possible premium costs for your farm, there are several resources available to help you make an informed decision on whether micro farm insurance could work for your farm business. USDA Risk Management Agency has tools to estimate your premium costs and to locate an insurance agent in your area. The tools are linked in the video description. We here at the Carrot Project are also available as a resource for farmers in Connecticut, Massachusetts, and Rhode Island to help you estimate premiums and look at the financial feasibility and benefits for your farm. Find us at thecarrotproject.org on social media or reach out to us for individual assistance at businessassistance@thecarrotproject.org. Thank you for joining us and learning about USDA's Micro Farm Insurance policy.